Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a breakdown of the action in today's session. A strong day to cap off the week.
Yes, once again, just powered through, moving up to some key resistance levels. But we have a few stocks that I wanted to take a look at as well. Exxon Mobil, UnitedHealth, Apple, all industry giants acting pretty well here.
Yeah, some giants setting up, so we'll take a look at those charts. But first, let's take a look at the major indexes. The Nasdaq today up 2.1% by the close, followed by the Russell 2000 up some 1.9%. We also had the S&P 500 up 1.7% and the Dow up 1.3%. So all in all, a little bumps along the way, but a strong week.
Yeah, really strong week. And we could have certainly fallen further. We had reversals on Monday and Thursday, and we thought, well, maybe we've got something going here. Maybe this is going to be the start of a real pullback. And Monday we did fall again on Tuesday, and so I was like, okay. And but then we got a positive CPI report, and we kept on moving higher from there. Thursday we reversed lower a little bit, but or at least it was mixed. It was down on the Nasdaq, but we came right back. Didn't even have a second day, so. We really closed at the weekly highs. When you have two negative reversal days and yet we close at weekly highs, you can be nitpicky here, and I'll be nitpicky here, is that the volume has at times not been the strongest,
right.
On the NASDAQ or any of the major indexes. So that's a concern along the way, but still really strong price performance and resistance. It may pause for a moment, but then moves through it.
And Ed, the last time we saw 4 weekly gains in a row for the NASDAQ was late last year. So that's another, glass half full way of looking at things, even if we are approaching that declining 40-week line. We're still right around 13,000 on the NASDAQ, just above that level. So we still have all of these hurdles to clear, but we're starting to see this rally, at least for now, pick up some steam.
It is picking up some steam, and I think if we get through the 40-week line, 200-day line, that might be real evidence that this is a real rally, not just a strong bear market rally. I mean, bear market rallies can be big and long, and then they roll over. We'll see. I do think this is an area where, Scott Bennett from Invest with Rules, he was on IBD Live today, and he talked about, well, maybe you don't need to put on the brakes, but maybe step off the gas a little bit, not really, but because we just don't know. We've run up a lot, often on light volumes, so I think that you just have to think about, we could have a pause, we could have a pullback. It doesn't mean we're going to, but you should definitely be aware of that as well.
Definitely. Okay, let's take a look at the S&P 500, which something this week notable for the other major indexes joining the NASDAQ and clearing those highs from early June.
Yeah, very nice. Yeah, it looked like for a little bit that we might not, like we were testing again, but the last few days we've clearly moved above that level. 200-day is definitely in sight for the S&P and the Dow.
Yes, it is. So the Dow looking pretty similar here, clearing those early June highs, getting very close to not only the 200-day, but another round number at 34,000. And the Russell 2000 here, IWM, right at its 200-day line. I think maybe backing off just a little bit by the close, but this is the IWM ETF, of course, tracking the Russell 2000, but it looks like the Russell 2000 itself, data lagging a little bit here from what I'm able to pull, but it looks like within the final stretch of the session, it was above the 2000 level.
Yeah, so it looks like we got above there. I mean, it's not decisively above it. If we, it's not like you have to, when you have to stare at it and go, is that above? It's not. I mean, so you want to see it decisively clear. But yeah, this is a milestone. This is where the major indexes need to get up to and clear decisively. Again, as you said, there's still plenty of other hurdles beyond that, but this would be a big one. And it is amazing how much, because a few weeks ago, the market rally looked like in real trouble. I mean, it was like undercutting the fall through day. All sorts of things were going badly with it. So really come a long way in the last few weeks.
We really have. And yeah, and as we always say, it's one thing to get above a key level, but can we stay above it? So we'll have to see how things progress. But let's take a look underneath the surface to see how different industry groups and sectors performed. First, energy. So here's a look at XLE, up 0.75% on Friday and over 7% for the week.
Yeah, this is shaping up. Oil prices are up. Gasoline prices are up even more. Natural gas prices even more than that. So all of that, look, I mean, these stocks are going to rise and fall
Yeah.
with energy prices. I mean, ultimately, so they're
Yeah.
coming back. We're going to look at one oil major, but natural gas plays are doing particularly well. And to see how that plays out. But this is definitely nice action. They sold off really hard, and if energy prices can still continue to rise, there's going to be a lot of opportunities. Already, a lot of them, cleared some entries this week.
Mm-hmm. And we also want to check in on XLV. This is the healthcare ETF, clearing a potential entry after hitting some resistance initially, but picked up the pace again today, up 1.3% on Friday, up a little bit more than that for the week. But I think notable here to clear some of that tight action.
Yeah, and it's also nice to look at this because medicals have done well. There's been back and forth. UnitedHealth, which we're going to look at, this is the biggest weight in this index. Exxon is the biggest weight in XLE. But this one is definitely much more diversified. All sorts of kinds of firms that are in XLV and obviously the medical sector.
Sure. Okay, and next on our list, we want to look at XME. The metals and mining stocks have really made a comeback in the last couple of weeks as the market has rallied, capping off the week with a 2% gain, up over 8% this week to get above that 40-week moving average, and definitively, at least for now, breaking a downtrend.
Yeah, that's nice. I mean, the volume is much less on this uptrend than it was when we got hit a lot of selling up near the top and even along the way. We really aren't getting there. So that's an issue. But we are seeing some of those steel names and to a lesser extent the miners come up a little bit. And this is also a positive sign about the economy. It's like, okay, maybe the economy is strengthening a little bit or firming. And so this is one indication of that.
Mm-hmm. A good note there. We also want to take a look at IYT, the transportation ETF, up 3.5% and coming right up to the 40-week line in a strong advance since mid-July.
Yeah, all these shipping companies that it's like the trucking firms, the trains. I mean, some of them are getting interesting, some of them are not, but it's just nice to see them coming back. There is a lot of breadth to this rally. A lot of them still need time to set up and maybe then pause to really form bases. But it's again, there is some breadth to this market which we weren't seeing initially.
Yeah. And last but not least, chip stocks. How are they doing? Really took a hard hit towards the beginning of the week on that NVIDIA warning, with SMH down over 4% that day, but shook that off and was able to manage a positive close by the end of the week.
Yeah, there was the NVIDIA and the Micron warning. Micron ended up positive for the week. And it's like, oh, just had a pretty decent week all in all. But, so those were warnings, and yet the market coming back. And there's a few chip makers that are really doing well. But again, this is a really positive sign for the market to shake that off and for the chips to shake it off. So a resilient sector, resilient market all of a sudden, when for a while, I mean, honestly, those seemed like really negative. And you saw those things coming in. And then we got the CPI report. It's like, man, things could get very ugly. And then this was what turned out instead.
Right. So yeah, NVIDIA here looking pretty similar, and Micron going below its moving averages and then popping back up by the end of the week there. Nice upside reversal outside week. And as promised, we're going to take a look at three leaders in their industries. We've got Exxon Mobil, the oil major, up over 6% this week. Did seem like volume was kind of light here, Ed, but back above that 50-day line. So a handle forming here on this base.
Yeah, I think the handle is just a little too low to be there on the math, but very close. You could use that as a buy point. I think if you do a declining trend line might be the best thing. We've been trying to look for early entries. One reason I went with this one, well, one is diversified. It does have natural gas. It does have gasoline. It's not just oil. But to be honest, some of the natural gas plays have already moved.
Yeah.
They're already maybe not ideal spots. So there is something. This is no longer leading. When we were in March and April, this was leading because it was oil and gasoline that was just so tremendous. So there is that. I don't want to make too much of it, but this one is setting up. It could definitely do well again, especially if oil starts to take the lead from natural gas. But this one has tremendous earnings. You could also just play XLE, to be honest, because this and Chevron are 45% of that ETF. But the volume is an issue. It is not the leader in the sector, but it is doing pretty well here.
Right. And I think another signal about improving market conditions, Ed, is that I'm setting quite a few alerts on charts for stocks setting up. So it's great to have that as part of the routine, because if there are going to be more stocks potentially setting up and buyable, in order to keep tabs on all of them, can be handy to have those alerts, so that way you can be prepared to buy if it does trigger that alert. Of course, you want to make sure that you do your research beyond that. It's not as simple as, all right, alert triggered, I'm going to buy it, but you know what I mean.
Yeah, absolutely. And sometimes, I draw alerts below where I might want to buy them, just so I have that extra time. It's like, wait a second, or just to keep tabs on it. But that is definitely, I think, a buyable area that you set up there.
All right, and next on our list, let's take a look at UnitedHealth, UNH, continuing its move higher, up 2% on Friday for the week. Looks like it was up about 1.6%, but has a lot of up weeks here versus down weeks on the weekly chart. So a nice uptrend that it's had.
Yeah, and this is still technically in the buy zone. There's two cup with handles. There's a weekly cup with handle that's slightly higher, of 534 and change. The other one on the daily, which we were paying more attention to, was 518 or so.
Even though that was kind of tricky.
And
right before earnings.
Yeah, it was really the gap up. That gap up on earnings was sort of a place where you could buy it.
Yeah.
And so that was a nice area. One of the only times it had higher volume, really, but that's a chronic issue we're seeing. It has been riding the 21-day line a lot. I mean, for several weeks, that's been an area. So that's one thing. It looked like we were going to have a 3 weeks tight, I'll be honest. And that's one thing, is that it was very close. It needed to be within 1.5% of the weekly change, up or down. And it was up until the last few minutes, it was there. So that would have provided an alternate entry. You could still sort of treat this as another place if you want to add on some shares. Especially because it's almost treating it like another handle, effectively here. So a place to go here. It's sort of boring sometimes, but this has been doing very well. And,
look at that monthly chart. How boring is that?
Yeah. And there were some times a few years ago, with the Corona crisis, and then it was like, pandemic. And then before that, there were some issues about Medicare and stuff. So it lost its long-term leader status, but you could argue this should be could be back onto that, because it has a long track record that it's following.
That it does. And last but not least, let's take a look at Apple. On the day, up over 2%. This has had a nice move off of those mid-June lows, Ed, and both an RS line blue dot has earnings behind it. I know Harold was buying when the stock got above its 200-day line, so a nice buy there for him. But it seems like at this point, what do we do, Ed? Do we need to wait for some sort of handle? Can we look at it poking its head ever so slightly above a declining tops trend line? I mean, that's quite a few up weeks in a row. Volume has been lower, but it seems like there's a couple ways that you could approach something like this.
Yeah, and I've drawn a chart, a trend line on a daily, and I can't remember now if it's perfectly accurate, but it was where it was like a few dollars short of that. But it sort of comes, regardless, it's just sort of, it would be really nice to see a handle in this situation, because no, it's right there. And so it's coming right up there. Technically, could you buy it here? Sure. But with the lack of volume we've seen on it, and just with the fact that with rotations and whatnot that you can see, really would be good to have a handle here in a deep
Mm-hmm.
base somewhere along the way, like somewhere between here and 180, and then use that as a place to enter. But it's been really nice. Yeah, the relative strength is great. This is basically the only mega cap that's over its 200-day line. Maybe Amazon got above there, but this is the best performing mega cap for sure. This is a great sign for the market. If Apple can be a relative strength leader, and that's good news for the chips and a lot of other things. So it's really good to see Apple doing well.
Mm-hmm. All right, Ed, as we wrap up, what should be the plan for investors to prepare for the week ahead?
Well, you should still be ready to to not, to consider the fact that things may not go well. So just if you're going to
Mm-hmm.
add exposure, you want to be cautious in the very short run with the 200-day line coming up. And not saying that this is going to be a disaster. We could blow right by it. We could pause for a day or two or a week or two and then go through. Taking partial
Yeah.
profits is still a sound strategy. And that's actually one thing. If you say, "Oh, I want to buy some more stocks," well, you might do that. One way you can help finance that is by taking some partial profits, so you don't ramp up your exposure too much, but you lock in some gains. Make sure you don't get round trips in there, which are still a risk and would be a really serious risk if we started pulling back. But definitely a time to be taking part
Mm-hmm.
and looking for new opportunities, looking at those sectors. There's leaders in those sectors. So there are a lot of buying opportunities or a lot of setups that are forming. And so you
Right.
want to be paying attention, that not just trying to at the last minute trying to catch up.
Yeah, exactly. Because while the bull case is really building here, we don't want to be chasing. We don't want to now let that FOMO get to us because we are at or close to an inflection point with the resistance levels ahead of us, but also being at a point where, hey, Nasdaq's been up 4 weeks in a row. Could see the market pull back here. So we don't want to start easing up on that discipline and start chasing, the in phases and Celsiuses or, buying extended, but you're like Apple here. I mean, you can use a percentage stop to, you know, measure your risk there, but we don't want to start easing up on our rules. I mean, this is just because we've been in an uptrend for the last couple of weeks doesn't mean we're back in 2020 now.
Yeah, it is not 2020. You definitely need rules. And hopefully if you keep a level head and try to keep the emotion out of it, this could be a really good finish to the year. We'll see, but you don't know. You can't just project out. You don't want to draw a line on the bottom of Apple and just draw it straight up and say, look, by the end of next month it's going to be a 240. That's not how it works. And just there's just a lot of opportunities, and we'll just keep on tracking them and seeing how things go.
Yep. Continue to stay engaged every day in the markets. We can stay in step with those overall conditions. Thank you, Ed. And thanks everyone for tuning in. We'll be back with more on Monday. So make sure you join us first thing in the morning on ibdliveinvestors.com/IBD Live for the details on our daily morning live stream, where we're getting into the nitty gritty in the first 90 minutes of trade and interacting with our awesome audience. We'll see you there, everyone. Have a great weekend.